Hi guys, welcome back to episode 3 of AdStan Economics. Today we will be discussing the markets and recapping them again.
Yeah, so should we just start it off by saying unlucky Adam 2-0 to Chelsea against Spurs.
Yeah,
A little bit of footy banter in there before we kick off.
it's a tough time to be a Spurs fan, but to be honest, whilst we're in an economical environment, I think we need to discuss how Chelsea should probably be getting point deductions at the moment.
Well, I mean, we're not going to speak about that today, are we?
No, we're not. We're speaking about the markets again. So today we're going to speak about why the FTSE is up so much despite the UK being in a recession, and also why the markets aren't performing as well otherwise.
So currently the UK is in a shallow recession, but the FTSE has reached an all-time high of 8,213 points. So why do you think one of the reasons this has happened is?
Well, I think for me it's all about the fact that the pound's so weak at the moment. One of the reasons the pound is weak is because the UK, the Bank of England, are expected to reduce interest rates quicker than other countries. Now, if we think about hot money flows, that means that people are going to sell their pounds, buy other foreign currencies which are going to have a better interest rate, and consequently the value of the pound is going to decrease. But why is that important? Well, that's important because it means that exports are going to be cheaper, so countries are going to import. But what else does it mean, Stan?
Well, as exports are going to be cheaper for other countries due to our weaker pound, the AstraZeneca, which is at the top of the index, has increased 12%. Its current value is $177 billion, and the UK economy, so it's a multinational dollar company, which means that the UK economy has very little impact on its earnings apart from the weak sterling. So of course, like we spoke about, the exports being cheaper means that as the shares are in GBP, the earnings are in USD, so of course this is going to massively increase the earnings of the AstraZeneca and the other multinational dollar companies in the FTSE 100 index.
Yeah, that's what I forgot to mention. I forgot about how the fact that their earnings are reported in dollars, and obviously because the dollar's becoming stronger than the pound, that means their earnings are better and their share price is going to increase. So along with the rest of the top 8 who make up 50% of the FTSE, all of those companies being large exporters, all of those companies being multinational, means that the FTSE is going to be brought up as well, and that's why, despite us being in our recession, it's happening.
Yeah, so obviously this is going to increase the overall share price of the index, hence why we've seen recent peaks. So the top 8 account for half of the FTSE profit alone, and we could make a link to the S&P 500 Magnificent 7, couldn't we?
Yeah, the Magnificent 7 similarly make up 30% of the Standard & Poor's, so I guess, you know, those big companies are huge to the share prices of our indexes. But yeah, going back to it, one of the reasons that the UK are expected to decrease interest rates, why the pound is weak at the moment, is because we are in that recession. So GDP was down 0.3% last quarter. So while it's shallow, we need to try and get out of that recession. But because inflation has remained at 3.8%, it's not necessarily going to happen imminently. And then what about in terms of the return from the FTSE? Why is it so attractive to invest in that industry right now? And in terms of the FTSE, why is it such an attractive industry otherwise to invest in at the moment?
Well, that's because there's a 4% dividend yield in cash returns and a 2.5% increase in share buybacks. So this means when big firms buy back their shares, which is obviously going to decrease the supply of them and increase the demand, increasing their share price. And there's an overall yield of 8%, which is of course higher than inflation. And this also beats interest rates, which means that this beats cash in the bank. So people would be less likely to put cash in the bank, which is therefore going to lower interest rates and decrease the strength of the pound.
Yeah, no, definitely, that's so true. And also the fact that they're beating returns from government bonds as well. So yeah, so attractive right now, and that's probably why the FTSE is potentially going to continue to increase, although as we've seen it is quite dependent on the strength of the pound.
Yeah. So the FTSE being up is obviously something for the UK to cheer about.
Finally.
Yeah, at last. But speaking about other indices, the S&P was down 1.26% last month.
Yeah, so the FTSE has obviously been up, but the S&P is a weird one. It took a massive hit after we recorded our first episode, and since there's been a recovery, especially in the last couple of weeks. So right now it's at 5.12k bits, which is relatively high. But yeah, I mean, who saw that dip coming? Some people did, but
couldn't have even seen that.
yeah, potentially. I mean, it's hard to say. Nvidia was looking so strong, and part of that was due to Nvidia. So do you want to speak a bit about that?
Nvidia have released a new script for which simplifies the startup of their GeForce Now cloud gaming service on the Valve Steam Deck via the use of shortcuts. And this is obviously going to increase the share price of Nvidia and Valve. And the consumption of the Valve Steam Deck and Nvidia's GeForce Now service, which is of course due to the Magnificent Seven. Nvidia's share price rising will mean that the S&P has risen, and Nvidia is currently trading at 885 bits.
Yeah, so that's really interesting actually. In the last couple of weeks, Microsoft and Google have reported really good earnings. So both of their share prices were up a few percent last week, which has been one of the key factors to growth. As you say, in the Magnificent Seven, like we said earlier, 30% of the S&P, they drive that growth.
Yeah.
And then also Apple, even though their earnings were down from the last quarter, so I think the revenue from the iPhone was down 4%, for example.
Yeah.
That was better than expected on Wall Street. And so their share prices also increased. This is partly due to them announcing the biggest buyback of shares at 110 billion that we've seen.
110 billion.
And also 25 cents per dividend. So if you own Apple right now, although they're not performing as well, the share price is up and you're going to be getting some good money.
Yeah, you've got a lot of money in your pocket. So one of the reasons that the market's down recently is due to net of stock buybacks was the lowest since 1999 at $120 billion. And huge firms such as SpaceX and OpenAI, Stripe and ByteDance, which have billion-dollar valuations, and we're not just talking tens, we're talking hundreds of billions of dollars, are choosing to remain private. And one of the incentives of staying private is the ability to hide intangible assets such as software and copyright. And also private equity firms have increased their investments in the past 5 years. They've doubled it. By mid-2023, private equity firms held $8.2 trillion in assets, I believe. And a reason why there is a lot more of these huge multi-billion-dollar firms choosing to stay private is because there's a lot more options for these firms now, and there's less pressure to go public. Because there's always going to be, funds that will want to invest in them.
Yeah, so 100% right, everything you said there. And if we have these big companies being owned privately, they're not going to account in the S&P. They're going to have no effect on it. They're not going to affect the markets. And that's why there's been a decline, because these big companies are performing well, but they're having no effect on public shareholders. And a mate of mine, actually, his dad owns MIQ, a big media business advertisement, and they're worth a lot of money. They're not for public sales, so you can't own shares in them, but they've had multiple private equity investments, and for him as an entrepreneur, that promises him a good return, enables him to still play a big part in the business while seeing it grow. And I think if you're an entrepreneur, it makes complete sense when you have the opportunity to do that, to go down that route.
Yeah, so I just want to say, because of course with private equity there's probably slightly less risk than going public, because you don't know how sort of your stock's going to operate on the stock market. But with private equity, it's a lot more certain.
Yeah, and then going back to what you were saying about copyright, intellectual property plays a massive part in this. If you're private, your methods, your trademarks, your patents aren't going to be shared, and so you're going to remain less competitive and more likely to have a greater market share, because other people aren't going to be using the same successful techniques as you. And I think that's a massive reason as well why people are staying private, and therefore why big companies who are performing well are having less of an impact on the markets overall.
Yeah, but also to touch on that, if companies do choose to stay private, they of course do have to announce their financial data and provide information of it. And if the information provision isn't enough, or the sort of whole picture, the value of the company could go down, and there also could be lawsuits involved.
Yeah, heavy fines. It's interesting. It would be nice to be in a position, wouldn't it, where you had to decide whether to go public or whether to have a private investment of that big. But yeah, I mean, the market's really interesting at the moment. Lots of fluctuations. Some shares are doing really well. The FTSE's up, which makes us as UK citizens feel rather happy. And actually, just thinking about it now, one of the reasons for that is that the profits to share price ratio in the UK is so much lower than in the US.
Yeah.
So it's almost as if the FTSE has been meaning to go up for a while.
Yes, a long time.
And maybe that's caught up on the S&P, and that's why it's down.
Yeah. So yeah, I think that's the end of our third episode, recapping the markets. We'd love to hear your feedback, guys. Make sure you like and subscribe. I'm not saying that.
No, it's fine.
No,
right?
you say
really enjoyed today's episode. You know, we've gained a few subscribers in the last couple of days.
Yeah.
So yeah, really appreciate any feedback. And yeah, thanks for watching, guys.
Yep. See you later.